Land and Building Tax, Pajak Bumi dan Bangunan (PBB), is a form of tax imposed by the government on the ownership of land and buildings. This tax is an essential part of the national fiscal policy, serving as a significant source of revenue for local governments in many countries, including Indonesia. The tax is regulated based on the value of the land and buildings owned by individuals or entities. The main objective of PBB is to support regional development by providing local governments with a steady stream of income. This revenue is typically allocated for infrastructure development, public services, and other local programs. The tax is levied annually, and the rates vary depending on the value of the property and the regulations in place within the local jurisdiction. In Indonesia, PBB is governed by the Law No. 12 of 1985, which was amended by Law No. 12 of 1994 and further refined by subsequent regulations. The tax is generally calculated based on the value of taxable objects, the land and buildings, which are determined through a system called the NJOP, Nilai Jual Objek Pajak, or the sale value of taxable objects. The NJOP is assessed periodically by the local tax office, which determines whether there have been significant changes in property values due to market fluctuations or infrastructure developments in the area. The rate at which the tax is applied is progressive, meaning that it increases as the value of the property rises. In practice, there is a minimum threshold value, and properties below this value may be exempt from the tax or taxed at a lower rate. Taxpayers are required to file annual tax returns and make payments according to the assessment made by the local tax authorities. Factors affecting land and building tax calculation. The calculation of PBB is influenced by several factors, including NJOP, sale value of taxable objects, the value at which the land and building are appraised for tax purposes. Tax rate, the rate applied varies depending on the value of the property, and it is determined by local government regulations. Taxpayers' obligation, individuals or entities owning land or buildings are required to file a tax return and pay the tax. Exemptions and reductions. Certain exemptions or reductions can be granted based on specific conditions, such as the use of the land for public interest, religious purposes, or if the property belongs to lower-income individuals. Additionally, local governments may provide reductions to encourage development or conservation efforts in certain regions. Challenges in implementation. One of the challenges in the administration of PBB is ensuring an accurate and up-to-date assessment of property values. Market fluctuations and the increasing complexity of property ownership, such as land use changes or developments, often lead to disputes regarding the NJOP. Furthermore, ensuring equitable tax distribution across different regions and maintaining transparency in the assessment process is crucial for improving the public trust in the tax system. In conclusion, the Land and Building Tax, PBB, is a vital tool for funding local governments and supporting regional development. Its effective implementation is essential for fostering sustainable economic growth and improving public services. Proper management and regular updates to property assessments can ensure the fairness and efficiency of the tax system, contributing to the overall economic health of the region.